So we will continue our discussion from yesterday's lecture, from yesterday's class, wherever we had stopped yesterday. We will continue from that part. So yesterday we were discussing about Unit 1 of Chapter 1. We've almost finished it. There are a couple of things that I have to tell you, and then we close it. Then we move to the second unit next. So I think I finished it. Quickly, let's run through the slides once. We were doing Chapter 1, Theoretical Framework. In that, Meaning and Scope of Accounting, Unit 1, a purely theory chapter. Then after that, I started with Luca Pacioli's picture, and then we went into the steps accounting process. Now, I want you to understand this accounting process very properly, very clearly. There is proper stages in accounting. Don't say ledger, journal, and all that. Not like that. It starts with journal or subsidiary books. Then it goes to the ledger. Then it goes to the trial balance. Then the financial statements. Know this process, properly. There are many of you who have for the second PC also, but we will not be able to understand the process. A sequence ಗೊತ್ತಿರುವುದಿಲ್ಲ ನಮಗೆ. We will not know the sequence. So my request or my suggestion would be just know the sequence. The sequence is very important. So whatever problems we do, whatever knowledge we need, uh, it comes with all these things, small things, but you should know all this properly. So here, as I was mentioning, there's a sequence. What is the sequence, sir? It starts with what, sir? It starts with recording. Recording is either in the journal or the subsidiary books. Then after recording, it goes into the ledger. From the ledger, we prepare something called as trial balance, which is a summary. And from the trial balance, we go to the financial statements. Now, financial statements, I have told you there are three important components in financial statements. Component number one is the balance sheet, which is nothing but it represents the financial position. Then you have the profit and loss statement, which represents the financial performance of the business. Disclosure. This is additional disclosures that may be required by the law. For example, cash flow statement we have done. In the case of NPO, one more additional disclosure what we do is receipt and payment account. If you've done NPO problems in 12th standard, income and expenditure account is representing the financial performance. We don't call it a profit and loss account in the case of NPOs. We call it as a income and expenditure account. Then in the case of balance sheet, we call it as balance sheet only. NPO I'm discussing. But we also show something called as receipt and payment account. Now, this is an additional disclosure. This is one additional point we show in our financial statements. In addition to the financial position and performance, we also show receipt and payment account, which is an additional disclosure. Adanತ ಅಂತ ಹೇಳಿದ್ರೆ cash flow statement ಇಂದ ಹಾಗೆ cash flow statement ಅಲ್ಲಿ ಹೇಗೆ how the cash flow statement shows various cash payments and cash receipts. So receipt and payment account also is a summary of the cash book. It shows something like that itself through the receipt and payment account as well. Then, yeah, so that is about financial statement components. Objectives of accounting: systematic recording of transactions, ascertainment of financial position of the business, ascertainment of financial performance of the business, communication of financial information to the users. 4 points we discussed. Users of financial information, we discussed all this in depth. I told you management, owners, employees, why do they use the information also we discussed. Subfields of accounting: financial accounting, cost accounting, management accounting, human resource accounting, and social responsibility accounting. So these are the five subfields of accounting. Then functions of accounting, we discussed what does the accounting do? What does it exactly do? It helps you in measuring, forecasting, decision making, comparing and evaluation, and government rules and regulations, that is regulation and taxes. So for this also the government will use the accounting information. Now let's discuss limitations of accounting, guys. Okay, limitations of accounting or financial statements. This question was asked once. Limitations of accounting or financial statements in the exams for 4 marks. Let's start. First one, ignores qualitative aspects. What do you mean by this? We'll give practical examples. We'll discuss it practically, right? So now let us take a company. Hmm, which company? Okay, we will take Asian Paints. I'll go to their numbers, financials. Okay. Now I'm showing you the financial statements of Asian Paints. I'm showing you two numbers over here. Okay, June 2019. This means this is relating to the first quarter of 2019-20 financial year. You know how quarters work, right? I don't have to tell you how quarters work. I'll quickly tell you. In every year, how many quarters are there, guys? This is a general knowledge question. Come on, if someone can answer it. Every year, how many quarters do we have? How many quarters do we have? Very good, Gaudo. We have 4 quarters. Wonderful, wonderful. We have 4 quarters. First quarter is May, or rather it starts in April. That is April, May to June. So 1 quarter, 3 months makes a quarter. Then you have July to September. Then you have October to December. Then you have January to March. Okay, so there are 4 quarters. Now, what we are going to see is this quarter ka numbers of 2019, that is last year, and 2020. That's how we compare. Okay, data is compared like that generally because seasons will be same. The season, if the season changes, the consumption levels or the consumption, the way of consuming stuff will also change. Chaligaladili, you like to eat hot stuff, and you don't like to wear leather stuff. So the way we live, the lifestyle changes throughout the seasons. So generally what we do is we do quarter to quarter comparisons. Okay, we call it as year to year comparisons. Basically quarter to quarter, year on year comparison. Now it's basically quarter one, that is, and 2020. Just the income, I just want you to see this. See, last year the income in June 2019, you can see 5,130 crores was their income. The total income, you can see the third column, third row, 5,204 crores in the last year. This year, Asian Paints has been able to post a total income of only 2,969. Now, if someone who's looking at this says, oh, 5,200 crores there is a massive dip to 3,000 crores. Massive dip, sir. 2,200 crores loss agide company ge last year compare madidre kadime sales agide ee varsha. This is what we see and this is what we feel. And I will assume that the company's quality of stock or the quality of their whatever the paint that they produce is not up to the mark. That is why it has gone down. The quality of the paint has not reached it. Some other competitor is eating up the business, so that is why their sales have come down or their income has come down. Is what I will think. But is this true? Is this true? Has their sales come down because of Asian Paints, right? Asian Paints, paint company. Do you think their income came down, their sales income came down because of low quality of paint? Has it come down because of low quality of paint? No. Why then? Why has it come down? Why has the sales come down? It's because of lockdown. It's because of coronavirus. Is my voice breaking? No, right? Okay. It's because of the pandemic. So now, when you look at these numbers alone, Nowhere it's written that it's because of coronavirus. When you look at the financial statements, nowhere it is written that it's because of coronavirus. Nowhere it's written because of lockdown. We don't pass an entry for lockdown. We don't pass an entry for coronavirus. In accounting, only quantitative stuff is, I told you, identification of transactions. We just identify the transactions and record those transactions. So we record only the transactions. We don't record, qualitative aspects, qualitative things, which cannot be, cannot be accurately calculated in terms of numbers. We don't record it. So their sales, which is a massive dip of 2,200 crores, their sales has come down by 2,200 crores, is because of the virus. No one's painting their houses. There is no labor to paint the houses. There is, the shops were closed for majority of that quarter till May or something. The shops and all were closed completely. So, because of all this, there is no painting. People are not painting their houses. Even then, they have posted around 3,000 crores of turnover or sales, which is not bad. So, what I'm trying to tell you is, when you look at the numbers alone, without knowing the facts, you might misinterpret the company. You can misread the company. You can misunderstand the company without actually knowing the qualitative aspect. And the qualitative aspects we don't record in the financial statements. Now, record Madhudullah financial statements. We just show numbers. So, this can be misleading. This can be very misleading. So when you look at the numbers, it can be misleading. Now, for example, see, I showed you there was a dip in that company's stock value or their sales. Their sales, there was a dip. Now we will go to this company. This is Britannia. Now you will look at the same quarter results I'm taking for Britannia. For the first quarter last year in 2019, 2,700 crores, it's increased to 3,420 crores in this quarter. You will say, if someone is arguing with you, that person will say, hey, Britannia also had lockdown. But look at the Britannia's statement. Britannia has made more profits, more sales this year. Their sales have gone up by 700 crores this year. Britannia's sales has gone up by 700 crores. So how did it go? It's because their business did not suffer because of lockdown. They were in biscuit business. In fact, they could make more money during the lockdown because people were not going out to restaurants. People were not going out. So people were maximum going to their refrigerators. So they could eat all this food, all this packaged food and all had sales. So that is why their sales has gone up. Their sales has gone up. So all these aspects, qualitative aspect, this is because of lockdown. People are not going out. Restaurants are closed. So that's why their sales have gone up. So all these qualitative aspects you don't get to see in the financial statements. Namge financial statements are kaanudilla. This is general knowledge. This is qualitative things, which we can't interpret looking at the financial statement. So this is one of the biggest limitations. This is one of the biggest limitations of accounting, of financial information. So just looking at the numbers, you can't always judge the company. You can't always measure the company's performance. You can't know if the company is going the right way or the wrong way just by looking at the numbers, unfortunately. So accounting has its own limitations, and one of the major limitations is this, especially in times like this, that limitation shows. That limitation is out on display because of times like this. We don't record or we don't show aspects relating to qualitative things. So I hope you understood this. So ignores qualitative aspects. Next part, estimation. There is a lot of estimation that happens in accounting information also. We estimate a lot of things. For example, I'm sure you've heard in 12th standard when you were in second QC, about the provision for doubtful debts. It's an estimation. We take a rough percentage. Or depreciation. Now, let us say I bought this a mobile phone, say 1 year back, and I bought it for, let us take 20,000. Let's say I bought it for 20,000 rupees. Now it's been 1 year. If someone comes and asks me, how much has the mobile phone depreciated over 1 year? I will say, I don't know. I don't know. I can't tell you exactly how much number it is depreciated. Now he'll say, okay, calculate. Illi on the scratch bidide maraya. Illi on the scratch bidide. You can't do this, right? In the case of a machinery and all, you can't do this. In the case of building, you can't go on searching for exact amount of depreciation. How much is the value reduced over 1 year, 2 years? You can't do this. So we have to estimate. We have to consider saying that okay, last year we had bought 5 years back, we had bought a machinery. It became useless in 5 years' time. So based on that data, we can say this also would be eligible. I mean, could be there for 5 years or something like that to make an estimate. New approximation ಮಾಡ್ತೀರಿ. But just estimations are not supposed to be accurate. They're not accurate. They are not accurate. So estimations give you inaccurate data at times. It is not accurate, which again, that means accounting is not very accurate also. It doesn't give you proper pinpoint precision in whatever it says. There is some level of estimation involved in accounting also. When we say financial performance, the financial results of the business, there are some estimates that go into determining that financial performance of the business, like depreciation, I told you. All these things are estimates, even financial position. So the estimation is involved, and that is a limitation of accounting. We don't get accurate data because of this point. Ignores price level changes. Ignores price level changes. What do you mean by this? Over time, I was telling you about various biscuit companies and all. I'll just continue. You've heard about Parle. You've heard about Parle. Parle is a biscuit company. So Parle G and all that. They are a very old company. It's a family-run business. Now, let us say Parle had sold, or Parle's turnover in 1985 was 3 crores. In 2019, their turnover was, let's just say for numbers, 5 crores. It's more than that, it's in thousands. I'm just giving you a rough number. It was 3 crores in 1985, and in 2019 it is 5 crores. Now, my question is, can the management of Parle be very happy that, oh, 2 crores we have increased over 35 years' time? Can they say like this? Can they be very happy about this? The answer is no. 3 crore rupees in 1985 could have bought you a lot of things. I mean, you would have been counted in one of the elite persons in the country if you had 3 crore rupees. 3 crores was hell lot of money back then, in 85. But in 2019, 5 crores also is a lot of money. I'm not saying it's not a lot of money. Of course, it is a lot of money. But it's not as big as 3 crores in 85. The number has gone up by 3 to 5, but in 85, you would get a plate of lunch for 50 paisa or less than that, 20 paisa. Now you don't get anything for paisas, right? So everything is in rupees now. So the price level changes have occurred. You could have bought at 3 crore rupees in 85 probably 20 houses or 30 houses in a place like Bombay. Now with 5 crore, I don't think you can buy even one or two houses with that much money in a place like Bombay. I mean, a normal, decent house, big house. So not possible. So what I'm trying to tell you is the value of rupee has gone down. Very good. The value of rupee has gone down. That means because of inflation, every year 10 to 12% overall increase in prices happen. In our country also inflation happens. So goods become expensive. Every year goods become expensive. The purchasing power also goes up. So this is economics. So that happens in any economy, and ours is not an exception. So that is why, but that is ignored in accounting. In accounting, when you see 85's balance sheet or 85's financial statements, you will see a turnover of 3 crore, and you compare it with today's 5 crore. A, a person who doesn't know the value, how much value the value it has changed, the value of rupee has changed, or inflation and all, if that person doesn't know, he will be misguided. He will be misguided. So this is because of ignoring price level changes. Window dressing. What is window dressing? What is window dressing? Any idea? What is window dressing? Curtains, huh? Window dressing means curtains, sir. What is window dressing? Window dressing means manipulation of accounts. Manipulation of accounts. See, accounting information is the covering the reality. Very good, Prajwal. Accounting information is the only source of information for us, for the management, for the government, for all the users of financial information. They are relying too much on accounts. So, when I'm showing you these numbers, I've showed you these numbers. Do you know if it's real or not? We don't know. We're trusting people here. We're trusting a lot of things over here. When they're saying sales at 3,420 crores, are you going to go and actually check every invoice of theirs, every sales invoice of theirs? Are you going to check every document over there? No. You're trusting people over here. When they're telling you 3,420 crores, you believe that it is 3,420 crores. You're just trusting it. So over reliance is there on this. There's too much reliance on the numbers. There is no other data which I can consider. Okay, what is the sales of Britannia? Do I have any other number to look at? No, only financial information, only accounting records. Accounting records is the only source of information. Now, what can this do? What can this do? This can be very dangerous. Relying too much on this could be very dangerous. You could go wrong. These numbers could be wrong. If the company is manipulating the accounts, the auditors are not taking enough care, while if they are negligent or they are corrupt, if the auditors are corrupt, or if the auditors are negligent, so in such cases they might also not find out that it is not correct. They might also not find out that it is manipulated. They might also be misguided by the management. So when that happens, a user like me and you, we will believe these numbers and we will invest in the company, or we will have business with the company. We are basically misguided. So this, tomorrow when the truth comes out, we will lose money. There will be something wrong that happens with our money. A lot of scandals have happened because of this. Lot of scandals. People have lost crores of rupees, billions of rupees all over the world. In India in 2009, there was a famous scandal. I'm not sure if you've heard, a financial scandal which shook our country, which is Satyam Computers. Satyam Computers was exactly this: window dressing, manipulation of accounts. Books of accounts were manipulated in that scandal by the management. The auditors were corrupt, the auditors were bribed, and the auditors also did not report it to anyone. They also did not tell anyone. But the accounts were cooked up. We say cooked up. The accounts were cooked up. It was not the real accounts. They were showing fake sales, dummy sales, jasti income ತೋರಿಸ್ತಿದ್ರು to attract investors. They wanted more money. So to attract the investors, they were showing more sales. They were showing more profits. and the company went bankrupt at the end. There was a lot of scandals. Around 6,000, 7,000 crores of rupees was involved, and finally the company was merged with Mahindra. Mahindra took over that company, Tech Mahindra. Now it is known as Mahindra Satyam. But it was one of the biggest IT companies in India back in 2008, 2007. It was soon after, it was this big, I'm telling you, it was the third biggest IT company on the basis of their turnover, what they were reporting. Infosys, Wipro, and Satyam. It was that big. It was almost as big as Infosys at one point of time. Their share prices fell from 560 rupees odd to 13 rupees. 13 rupees over a period of time, 1 month or something. That was the dip. Now imagine a person owning 10,000 shares of Satyam, 10,000 into 560. That was his worth at one point of time in 2008. As soon as the scam was found out, 13 rupees per share. Imagine the loss he incurred. Imagine how much he had to suffer because of this. The investor had to suffer because of this. Not just the investor, even the bankers who given loan to the company might have suffered. Okay, the bankers also might have suffered. They also believe these fake numbers. They also believe these wrong numbers that the company was, actually giving. So this is a very dangerous thing, and it happens in accounting very often. So we have to be. That is also one of the limitations, because I told you, over reliance on accounting. We rely too much on accounting. So this also causes problems if we're relying on this itself. There's no other source of information for us to know what is happening within the company. So these are the 4 points. I hope you've written these 4 points. Ignores qualitative aspects, estimation, ignores price level changes, and window dressing. Okay, shall we move ahead? Next, we will discuss about a transaction and an event. So what is a transaction and what is an event? I'm going to discuss right now. Okay, transaction, as I have already told you, it is any activity that happens in terms of money. For example, purchases. You purchase something, that's a transaction. You sell something, it's a transaction. I will give you, Dharani, I will give you notes with explanations wherever required. For all this, it's not required. I'll give you explanations at the end. After the syllabus is over, I'll give you a set of 20 questions. You don't have to read anything now. Now, just understand what I'm saying. Now, just pay attention in the class. Just like the side pointers for exam point of view, that 4 mark question, if you study now, you will not remember. You're writing your exams in May 2021. That is like 7-8 months away. If you study something theory now, you will not understand. So what I'm doing is I'm ensuring that you become a little stronger in the concepts in accounting, basics in accounting. So just pay attention to whatever I say. More focus on is should be on just unlearning what we've studied before, because there's a lot of things we've not studied it the right way. We've by-hearted entries, we've by-hearted things and gone to the exams. So I'm just giving you concepts. I'm just giving you concepts, and I'm giving you more exposure towards the basics, the fundamentals of accounting. So please pay attention with whatever I'm doing. Don't worry about the exam point of view from this chapter. This you can take care of it at the end. Okay, coming back to transaction. What is a transaction? Transaction is any activity which is measurable in terms of money. Okay, whichever is measurable in terms of money is known as a transaction. Now, sir, can you give me some examples? Sir, I already gave you some examples. For example, purchase of goods. Now you go to the market and you buy something. Like for example, during this lockdown, we were all buying only bread, potatoes, carrots, milk, cheese, butter. So this is purchases of various goods. This is also a transaction. It is a transaction because it's an activity to which we can uh, which is measurable in terms of money. You can say that I purchased goods worth rupees 62 rupees or 70 rupees or 80 rupees. So like this, you can say it is a transaction. Payment of those bills is a transaction. Sales of goods transaction. Purchase of this glass transaction. So these are transactions. Okay. Now, uh, what is not a transaction? Qualitative things. For example, it is raining outside. Not a transaction. How can you measure rain in terms of money? But it might have an impact on my business. Rain could have an impact on my business. If I am a person who's selling pani puri, I will have to shut my business and run somewhere with that my pani puri items, because I'm not able to sell during the rain. If I have a big umbrella, probably yes, I can. But I'm just telling you, it might have an impact on my business. That doesn't mean I will enter it in my books. Transaction is any activity which is measurable in terms of money. That is known as a transaction. Remember this. So, activities which are qualitative. I running from here for 5 kilometers. That's an activity, yes, but it is not a transaction. So only those activities which are measurable in terms of money. I am running here from here to there 5 kilometers and I'm getting paid for it. I'm getting 5,000 rupees for it. That becomes a transaction. I'm running for that money. So once I get that 5,000 rupees, that's a transaction. So that 5,000 rupees, whatever I'm gaining, that was to be recorded. So if money is involved, then we call it a transaction. Otherwise, no. So I'll give you notes. Don't worry. Don't write anything now. Event. What is event? Event is something that is a result of transactions. It's not your function. I don't tell functions. Yes, very good, Anisha. It is results of transactions. Now, when a person purchases, he will have something called a stock. As a result of all the purchases he's done, he will be left with something called as inventory or closing stock. Closing stock is result of transaction. Closing stock is result of transactions like purchases, sales. All this happens, and that is after that we remain with closing stock. So I purchase 1,000 units, I sell 800 units. So I'm still left with 200 units as closing stock with me. The closing stock is what, sir? It is a result of various transactions. During the year, we've done so many transactions, so many purchase transactions, so many sales transactions. After all that, what is left with me is an event. So the result of transactions is known as an event. Now, debtor balances. Do you know what is debtor balances? Debtor. It's not debitor, it is debtor, although it's spelled like that. Debtors. Now, debtors are also result of transaction. This is also a event. Example. I mean, how does debtor work? There's no example as such. Let's say I sell goods on credit during the period. So I sold goods, let's say to Anisha. Anisha, I sold some goods on credit during the period. I sold 5 lakh worth goods to Anisha on credit. Credit means saladulli. Transaction kottadana, goods kottadana. So 5 lakh, this is a transaction. 5 lakh worth sales for me is a transaction. Anisha during the year pays back 3,50,000. She's paying back 3,50,000. This is also a transaction. How much are we left with? How much more Anisha has to pay now? 1,50,000 Anisha more has to pay. So this is a debtor balance. It is an asset for me. I have a right to collect this money from Anisha. That means for others, for me, it is a asset. It is a debtor balance, we call it. So Anisha is a debtor balance in my books. And this is because how did Anisha's name appear as a debtor balance? Because of various transactions we had during the period. Me selling goods on credit, Anisha paying some money afterwards. So because of all these transactions what we had during a particular period, we have a debtor balance. We have a debtor called Anisha, which is an event. This is an event. So in simple terms, in simple words, Asan Basha, event is nothing but a result of transactions. Whatever we write in the balance sheet are events. Cash balance, it is an event. Building, book value of the building, it's an event. You purchased a building, it depreciated a bit over time, it's an event. Debtor balances, I told you, it's an event. Bills receivable, it's an event. On the liability side, bank loan, it's an event. It's a result of transactions. So we record events in the balance sheet, and the transactions are recorded. Where do we record the transactions? The transactions are recorded in the profit and loss account. We don't write individual transactions, we write total of all those transactions. For example, purchases, we write what is the total purchases made during the period, we write in the profit and loss statement. So the transactions, the sum of each of those transactions are written in the profit and loss statement, and the events are mentioned in the balance sheet. So I hope you've understood this distinction between transactions and events. Okay, so we'll write about this transactions. Transactions in the heading. Okay, just one line I will give you here. Are you all there, or am I talking to myself? Okay, you are there. Transactions refer to business activities which are measurable in terms of money. Example, sales of goods, purchases, etc. Events refer to the result of various business transactions undertaken during a particular period of time. Example, closing stock, debtor balances, etc. Are we done? Okay. Now we'll discuss about relationship of accounts with other disciplines. Disciplines means subjects, different subjects, different disciplines subject of studies, how accounting is linked to, and what are the different aspects of accounting which has an impact on other subjects, or those subjects have an impact on accounting. There's some mutual you know relation or connection between the two subjects. So I'm going to discuss those subjects quickly. Again, you just write the subheadings. You don't have to write the details. It's not so important for exams. And I told you at the end, I'll take care of your theory part also. My responsibility. You come, you will take care. I know what exactly you have to study and when. Right. So accounting and economics. Economics and accounting. Sir, how does economics have an impact on accounting? Some of us have studied economics, right? When we were in PUC. Then economics is theory, sir. Economics, what's it? That marginal utility, all those things we study over there, diminishing marginal utility and stuff like that, sir. What does it have to do with accounting? We've studied two parts in economics, micro and macro, right? Macro, macroeconomics is about the country, it is on a wider picture. So here, the macroeconomics of a particular country is decided based on accounting information that you have. Now, if you are saying what is the GDP of the country, or what is the how much we have, what is the export turnover of the country, or something like this, if you're speaking about specific numbers, big numbers, you speak in thousands of crores, this much turnover, this much exports during a particular period, these were the imports during a period, this is the balance of payment during a particular period. All these calculations, where do you do it from? Where do you get the numbers from? Elinda the numbers. Will it fall from the sky? No. Accounting gives you these numbers. Specific accounting that these companies maintain, these businesses maintain, you take those numbers, you add it up, and that is how you find out these numbers, and that is how you're going to measure the economy also. So accounting in the economics is not possible to a very great extent. So that is why, especially the macroeconomics part, you need to have numbers, and the numbers are given to you by accounting. So there is a connection between accounting and economics this way. Accounting and mathematics. Is there a connection between accounting and mathematics? Of course, yes. Of course, yes. Without mathematics, there's no accounting. Accounting is excessively dependent on mathematics, be it numbers, arithmetics, mainly arithmetics. When I say mathematics, arithmetics and mathematics. For example, numbers, additions, minus, to find out, to draw up a ledger account, I take the totals, which is arithmetics. I minus some amount and find out the balance, which is arithmetics. To calculate depreciation, I use percentage and I multiply it, arithmetics. So there's a link between accounting and mathematics. There's a direct connection between accounting and mathematics. Without maths, without numbers, accounting is not possible. So this is again another connection we can find of accounting with this subject. Accounting and statistics. Sir, what's statistics? What statistics has to do here? I'm not sure if you've studied this. I think you have. Ratio analysis. It is actually, I think you studied it at maths, but it is actually a statistical tool. Ratios. Statistical ratios. We call it as statistical ratios itself. So ratios and proportions. It's actually a statistical tool, which is used again in accounting. In accounting, you studied accounting ratios when you're in 12th standard. There was one chapter in the company accounts, which was known as ratios, that is accounting ratios. Again, those ratios are derived from statistics. Not just here, not just there in the case of ratios, but there are some methods also while calculating depreciation or while calculating goodwill, weighted average methods and all we use, which are basically, it derives kind of from statistics also, from the numbers, from the statistical point of view also. We derive some of the formulas, some of the methods from there to here. So accounting and statistics, especially for disclosure purposes, I told you the disclosure purposes. So again, if I have to tell you here, see this financial ratios in the karta financial ratios. So here there are so many ratios, written ratios, margin ratios. All these ratios are considered. Current ratio, you know how to calculate current ratio, quick ratio, and all you've studied. Debt equity ratio, interest coverage ratio, turnover, asset turnover ratio, inventory turnover ratios. So then there's PE and all valuation ratios. We might not know all that, but some of these ratios we've studied already when we were in POC. So these ratios are again statistical tools. Ratios and proportions are actually from statistics, which we use in accounting for disclosure, for better understanding of accounting data. You can use ratios also. So this is derived from statistics. That's why the link between statistics and accounting like that. Accounting and law. Accounting and law. Second PUC again. I'm going back to second PUC again. Sir, what about second PUC, sir? What is the fuss about this? Sir, we did vertical format in the case of companies. Vertical format balance sheet. Vertical format profit and loss account. Why did you do it? Sole proprietor, we did the balance sheet something else. We did the horizontal format. NPO, you did the balance sheet, as per the horizontal format. Partnership, we did the balance sheet, profit and loss appropriation account as per, the vertical format. I mean, horizontal format. Horizontal format ಮಾಡಿದ್ರಿ. Why for company accounts only you did it in vertical format? Why did you change the way you make the balance sheet in the case of companies? Why did you say equities and liabilities first? Why did you say assets next? Why did you list it like that? Why didn't you write it horizontally like this? Very good, Yogesh. It's because of Companies Act 2013. Companies Act 2013 Schedule 3 gives us that format. What you have done. That format is given to us by Companies Act 2013. So Companies Act 2013 says you, in the case of a company, you should draw up the final accounts like that only. New financial statements in Hage draw ಮಾಡಬೇಕು as per schedule 3 only you have to draw it up. So that is why we drew it like that. We can't draw it like this. We can't write liabilities, assets, and drop like this. You will get the answer. You will get the correct answer even if you drop like this. But the act says, the law says, the Companies Act 2013, which is applicable for companies, says you should drop the balance sheet, the profit and loss statement as per Schedule 3, and Schedule 3 gave us that particular format. So you know what I'm trying to tell you. The law has an impact on how we account, how we drop the financial statements. The law governs this. The law tells us that you have to do it like this. You have to do it like that. At times, the law tells us that this is how it is to be followed. So that is why the law also has an impact. Law means law of the land. And the Companies Act 2013 is law of the land. It is the law of India. In India, we follow it. So the law of the land can also govern how the financial statements are drawn. Accounting and management. Management is also a discipline. That is also a subject. Like for example, there's a course on this, right? MBA and all management. They study about business administration, masters in business administration. So MBA stands for Masters in Business Administration. That's about management, how to manage a company, how to take decisions relating to a company. So again, accounting helps. You need to know accounting numbers. You need to know how what impacts the business, accounting wise, the numbers wise. So even for management decision making and all, I discussed yesterday also about this a bit. So for management decision making and all, the numbers, the accounting numbers are important. So that is about relationship with other disciplines. Accounting and economics, accounting and mathematics, accounting and statistics, accounting and law, and then finally accounting and management. Are we done? Okay. Next one is role of a CA or role of an accountant. What does the accountant do? This will not come for exams for sure, but it is part of your syllabus. So they just want you to know what CAs do because most of us are not aware what CAs do. Are you aware what CAs do? What does a chartered accountant do exactly? Are you aware? No, right? No idea. ಎಂತದ ಮಾಡ್ತಾರೆ ಹಣ ಮಾಡ್ತಾರಂತ ಕೇಳಿದ್ದೇವೆ ಅದು ಬಿಟ್ರೆ ಬೇರೆ ಎಂತ ಮಾಡ್ತಾರೆ ಗೊತ್ತಿಲ್ಲ ನಮ್ಗೆ. Okay, I'll just yes. Three people answered, and three people have given me three different answers. Okay, okay. In fact, two different answers. One is filing taxes. One said tax returns and all. One said auditing. One said maintenance of accounting. Accounting records. Consulting. One person says. Yes. You're right. He does all these things. We do all these things. I will teaching. Okay, no, I'm talking about generic CA services. Like that CA could be singing also, CA could be dancing also, CA could be doing something else also. But that is something else, okay? The CA field, the profession, as a professional, what do we do is what we're talking about. Before I go there, I will ask you a very simple question. You've chosen this course, right? I'll tell you about two things before I get here. When a person is like when a small kid loves looking at big buildings, or let's say he's excited by these big buildings like Burj Khalifa, or pyramids, Egyptian pyramids, or Taj Mahal, or some architectural temple, these basadis. I'm from Woodbridge, so there's a 1,000 pillar temple over here. So when I when a kid looks at this and he says, "Wow, what an architectural genius! Yeah, shit, this is so good." And once I grow up, I also want to construct buildings like this. I am excited. I want to construct big buildings like these. So he will say, what he can become? He can become a civil engineer, right? He can do a civil engineering, and he can get into architecture also, or civil engineering also. You can do BArch, that is bachelor in architecture, or you can do engineering and get into civil engineering. If interior designing excites him, he can do interior designing. There's so he might choose that profession. Second set of people, or another type of kid is who looks at cars, bikes, motor vehicles in general, big trucks, big buses, and he looks at it and he's like, "Oh wow, what machines! Yeah, these machines are so good. That engine, it excites me." He can become an automobile engineer or a mechanical engineer. He'll end up becoming a mechanical or automobile engineer or something like that. A person who is really excited about how body functions. How do you fall sick? How do you recover? And generally about body functions and body parts and stuff like that. If a person is like really interested, he might end up becoming a doctor. A person who loves debating, a person who loves yelling, screaming, arguing, might become a lawyer, right? uh, I'll give you example. You can become Arnab Goswami also. That's something else. Anyway, I'll give you an example. Here, I have a younger brother. Okay, so when he was small, when we were in our school, really small. He's 3 years, 3.5 years younger than me. So when he was in say LKG or something, in kindergarten basically, we had a phone. Okay, we had that old Nokia phones you used to get, right? So black and white. Those I'm not sure if you've seen it, but you're too young to see it. I think we used to get those black and white heavy phones. Okay, there was one 3300 or some phone which Nokia used to produce, manufacture, and we had one of those those phones which my cousin had gifted to us. He had bought it from UK or something. So he had gifted it UK, London or something. He had bought it and he gifted it. This was in 2000 or something. When phones were fairly new, mobile phones were fairly new. My brother was always, he was in kindergarten, like what, 5, 6 years old. So he wanted to check if that phone gets charged through normal wires. See, back then we did not have so 15, 20 years back also, we did not have so many electrical devices. This was in 2003 or 4 or something like that. We did not have so many electronic devices. Now you have phone chargers, you have speakers which you charge, you have lamps like this. Before, charging was either iron box or that emergency light. These were the only things. Limited stuff was the television. To some extent, many people, we did not have TV that popularly back then also. But now you have a laptop, you might have an iPad, you might have a phone, you might have so many things that you use the plug points for. So if you see in old houses, you will not see too many plug points. There will be very few plug points because the usage of plug points is very limited back then. Now we use plug points a lot. We need it for a lot of charging and stuff. Even a trimmer you charge now. So many things are there which you can charge. So charging devices were not many back then. So my brother just was kind of curious to know how does that phone charge. There was a charger, but he wanted to see how does it charge. So what he did was you get that red colored wires, red, blue, black, and all. You get those wires, right? Normal wires. He plugged it into the pin and he plugged the other side to the phone and he switched on. The phone got burnt out. The phone got burnt out at that point. So he did this. Before it was not like this. Now you have this USB and all that is protective. You can't do that anymore with this kind of a charging point. Before you used to have that thick charging point. It was a pin which you used to put. It was like a pin. Charging pins were there. I mean, wired only, but different type. So there, what he did inside that pin. Is my voice not clear? Is there a problem with the voice? If there's any issue, please let me know. But is it clear or not? It's low. Okay. Okay. So I was saying, am I too loud now? No, right? You adjust the volumes. Okay, so I was talking about what? Yeah, my brother. So what he did was he tried this and the phone got burnt out and we lost that phone. Gone. The phone was gone. So he got shoutings and all from my parents, of course. I also shouted at him, but the phone was gone. We had to buy a new one very soon. We bought a new one, colored phone. We bought, thankfully. But what I was telling you is, he was curious about this, and later on, even when he was growing up, when he was in high school, when he was in primary, and all, you go to his room, you will find a old DVD player open, or you will find some electronic device open. He was always curious. Was always curious, and today he's an electrical engineer. He's an electronics and electrical engineer, engineer. He is. So he chose his passion. He loved doing it. He loved electronic devices and stuff like that. It was his passion, and he ended up becoming an electronic engineer. The point is simple. Why did you choose CA? I gave you so many examples. I told you about a civil engineer. I told you about mechanical engineer, I told you about a lawyer, I told you about a doctor, I told you about my brother who's an electrical engineer. My question is, why did you choose CA? Because when you were small, probably you loved taxation, right? Whenever you saw a bill and you said, oh, taxes, so exciting. GST, so exciting. That excited us, right? Very good. You're being honest, Yogesh. Wonderful. Yeah. What passion exactly did you find when you chose to do CA? What passion was it? Accounting records. I want to see. Nothing to do with passion. There are different reasons you can. Most of us don't even know what CA does. It's not about passion. Come on, let's be honest. Let's be dead honest about this. I did not choose CA because it was my passion. I did not know what CA does in the first place. You know, forget passion. Do you know what exactly a CA does? You know what is he does auditing. Probably you know he maintains books of accounts. Consultancy does. What consultancy he gives? You know what consultancy he gives? No. You know what auditing is? No. You have no idea how that all that works, right? It's not about what he does. That is not what excited you. It's not about what you're going to do excited you. It what excited you was other different things. For example, the respect he earns, the prestige that comes with the qualification, the money that we can earn. Very important, money. Money played a big role in our decision. They say CAs are going to be rich. So I also want to be rich. I'll also do CA. Status. These were the things that drove us here. It was not exactly the passion that drove us here. Let's be honest about it. There is because of this attitude, I mean, it's natural. 100% of them who choose CA course are not here because it's their passion. They have no idea what it is. None of us know what it is. Yes, I don't want to work under anyone. I want to make a lot of money. I want a good status, social status. Because societal people will look. Everyone seeks it. Everyone wants it. So when someone said CA course, you can get all this. So we took the bus. The scope is high. Unemployment literally no unemployment here. So all this excited us, and we came here. Now, why am I telling you all this is? You're not passionate when this happens. You are here not because of your passion, not because of something that drove you here. There was no internal factor. It was purely external. It was purely what people said, how people look at the profession. So there will be a problem here because of that kind of an attitude. We all face this problem. That's why the failing rate is so high in CA, because we look at this as studying as a responsibility and we don't enjoy it. There's so much to study, and when we don't enjoy it, we suffer. So by default, we all look at studies as something that is a responsibility. It is a responsibility for us. So what I'm trying to tell you is, it's not possible to find passion or something over here, but you should push yourself. You should create an artificial push, because there is no natural push. There is no natural push. There is no natural motivation. You have to motivate. You have to self motivate yourself artificially at times, and keep pushing yourself. Keep pushing yourself. Go to uncomfortable zones sometimes. So all that is going to take you a long way. All that is going to take you a long way, and that is how you are going to become a chartered accountant and a successful chartered accountant tomorrow. So don't expect you to be motivated on your own, or self motivation naturally barudullah. It will never come from within. There's so many people quit because they are not so motivated, or they're not so much inspired. So you have to motivate yourself. You have to keep it going, and it's a long process. As I told you, I might have told you, it's a test match. we are doing in CA is a test match. You're not going to get results in 1 day or 3 hours or something. It's not like a T20 match where you get your results in three hours or 4 hours of cricket. Here you have to play a long innings. You have to play a really long, and for that you need to have hell lot of patience. Hell lot of patience. Remember this. So I tell you, I suggest all my students also the same thing. You know, ensure that your mindset is not short term, and you're patient enough, and you have the motivation, or you have the willpower, which is very important to get there, to become a chartered accountant. Anyway, now coming back to this discussion, what does a CA do? Traditionally, the name CA says we are accountants. Okay, in many countries, I told you, chartered accountants are also known as just accountants. So traditionally, our job was to maintain accounts. We were experts in accounting. We could solve any problem in accounting, practical problem in accounting, how to pass entries, how to draw up the financial statements. We could help anyone with all this. And we were also employed by companies to draw up accounts, and to keep books of accounts, financial statements. All this was our traditional job. Is this traditionally 60-70 years back, we were doing only this. Then there was more scope, more things got added, more scope of work, more work we started getting. Taxes is a field where we work in very actively today. We are good in taxes, like direct taxes, income tax early, indirect tax early. In the country, we are the ones who have the most knowledge in taxes. In general, I'm saying chartered accountants have the most knowledge in taxes. Accounts, of course, is our bread and butter. In addition to accounts, taxes is our strength. Then they said, you are experts in accounts, so please become a checker of accounts or auditor of accounts. So audit those accounts. A company will maintain accounts, you go and audit. Examination madi, if they have maintained the accounts properly or not. You go and audit. Because you're an expert in accounts anyway, you know everything in accounts. So you only audit the accounts also. So auditing is another field in that a chartered accountant can practice in. Then we give consultancy relating to any business aspect, taxes early, finance early. We see a lot of businesses. We are so active with the businesses, and we know a lot of with time. It's not. I'm not saying I am experienced so much. With time, chartered accountants gain experience. So we become good at various fields. For example, business ideas, business management, all these things you get when you look at different businesses. You might be auditing those businesses, you might be giving tax consultancy. So you get to know intricacies, you get to know details of various businesses. So you become a good business person. Although you are not doing those businesses, your clients are doing those businesses, but you still have knowledge about so many businesses, which can be helpful. And you can give consultancy services. You can tell them that this is how you should do it. This is not a management consultancy. You can give business consultancy, that is. So like this, you can give consultancy services also to your clients. In consultancy, there are various types of consultancy also. HR consultancy, we call it as payroll consultancy. All these things you can do. And then outsourcing of various works. For example, books of accounts maintain Madudu, or just doing payroll work. Like for example, salaries. Many companies, what they do is they will not have a good system to remit salaries. So they will go to a chartered accountant. CA will take access to the business's bank account. The business's bank account will be taken over by CA. Every month, salary payments will be made by the CA through their bank account to all these clients. Their employees will be there. The business's employees will be there. So the CA will ensure that the calculations are made properly. There's something called as TDS, tax deducted. So all these things you'll not understand now. We will learn it later. But he will calculate all this. There's something called as Provident Fund, ESI, that is employee state insurance. professional taxers. So all these remittance calculations will be done by the CA on behalf of the business, and then paid to the employees. Whatever net salary we have to pay, we will transfer it to the employees. So many small businesses, take help of the experts. Outsourcing work kortara, which we sit and do. Outsourcing, we do it because to help the businesses, we charge every month. We charge say 10,000, 20,000 rupees to those businesses for doing so much work. So these were some of the services that a CA will provide. In auditing, you have two types, which is statutory audit, internal audit. Statutory audit is as per the government compulsion. Every company registered in India, every company registered in India must get its books audited compulsorily as per the Companies Act. It must get its books audited. So now who audits it? As per the Companies Act, only a CA can audit it. So only a chartered accountant can audit it. So that is why we call it a statutory audit. Then there's a concept of internal audit, that is within the organization, auditing can happen. This anyone can audit, not just CAs, but CAs are preferred over here also, but there's no compulsion that a CEO only has to audit it. Internal audit and the head of the ticket. So that also generally the CAs do. So there are various kind of work that the chartered accountants do in today's world. A lot kind of work can be done by a CA. We are not just accountants anymore. We are not just concerned with accounting anymore. We can do much more than accounting now. Much more than accounting now. And also the subjects you study in CA, you will realize that, okay, there's so much. There's so many types of fields you get into. Be it direct taxes and on paper into, indirect tax and on paper into, costing. Costing is a different subject altogether. We have a paper on costing at inter level, final level. So you can give cost consultancy also over here. You can do cost accounting also. So we do a lot of things, a lot of things now. The scope is very big. It's getting wider and wider by the day. Probably when you qualify, there might many other things also you could do. So that is how the field has become very dynamic. The CA's scope of work has become very dynamic, and there are a lot of opportunities also for chartered accountants. So, and by the way, this is the logo. This is the official logo of our course. Okay, this is the logo of our course. Once you qualify, the institute will give you a pen also with this logo on it. Then once you qualify, you can put a sticker like this on your car, on your bike, or wherever you want. You are officially allowed. Until then, you can't use this logo. It is illegal. You can be jailed also. I mean, that is a big breach of law. But only chartered accountants, the ones who qualify, can use this logo. It's an official logo from the institute. Same colors you should use, and you can use it on your address cards, or you can use it on your. Yes, I have this logo. Obviously, when I was qualifying, when I was studying for CA, this was always my. This was kind of a fantasy. This is my goal, ambition, to get that logo, to get access to that logo. So on your car, you can put on, they give you a pen and all that. Even on the name board out of the outside the office, they might put this logo. They will put this logo. This is very elite logo. Like how you have for doctors one logo, you have that red colored logo for doctors, or you have for the lawyers, that bow and tie or something. So like that for CAs, this is the logo. And it has a lot of prominence outside. In fact, I've seen my friends use it for their wedding cards also. One of my friends got married last year, and on his wedding card, both of them were chartered accountants, the groom and the bride. On the wedding card, they had written, this logo they had put in front of their names. Exactly this logo, same colors. It was a nice card. Cream color card. In that, suddenly you see blue and green in between. And it was this logo. So it's a pride for us. It's a pride for us. We will push it wherever we can. We will show it off wherever we can, because it's a pride for us. So for you also, you guys are also working hard. You guys are going to slog to earn this. Remember, this is what is going to This is your reward for so much hard work, and it is a reward which is worth it. I'll show you someday the pen I have. The institute gives you a pen once you qualify convocation at the matter. So convocationally they will give you this, and this is the institute's logo. This is our, I'm sure you've come across this. This is the institute's logo. So they give you a tie with that logo all over the place on the tie. It's filled with tie, embossed with that logo. They give you one lapel pen with this logo. So basically, it's a very elite thing. It's a very elite thing. This logo is. So notice next time you see a car, you see this logo. That means a chartered accountant is sitting inside the car. So that's how it is. Now, my question was, I wanted to ask you a question over here. Do you see something unusual about this? Is there anything unusual about this logo? What is that unusual thing? I'm asking you guys, what is the unusual thing about this logo? The tick mark, the line besides A, the green mark. No, you don't use green pens after qualifying. So I told you I will. Okay, the pen. See this. This is the pen. I hope you can see it. This is what you get when once you qualify. Once the convocation, during the convocation, are you able to see it? Are you able to see the tick mark, the CA symbol also over there? Yes. So that is the pen you get once you qualify. I've never used this pen. You never use it also. And this is this is mine. This is mine. And this is the lapel pen, which is on a coat, on a suit. You wear this. It's a lapel pen. So this also the institute gives you. It also has the logo. All these are things that excited me when I was your age. Anyway, then the car logos, car stickers. The institute gives you free car stickers also, which you put on the cars. So that is also given by the institute itself. ICA only gives you free stickers. If you're a member, you get stickers which you can stick on your cars. So now I was telling you what is unusual about this. What is the unusual thing about this? After final, once you qualify, you have to qualify to become a chartered accountant. To use this symbol or to use this logo, you have to become a chartered accountant. You will not get it before that. I told you this lapel pen you see over here. This lapel pen, it's clearly written ICAI member. I'm a member of the institute. So only the members get it. You will get it once you qualify, once you become chartered accountants. You will get this. So that is why you are working so hard for these things. Remember, it's just motivating factors. Okay. So I was telling you what is unusual about this. The unusual thing is this. The tick over here is a little different than normal. Normally we tick like this. This tick is like this. What is the prominence about? Why is it like this? Why is it prominent? I will discuss it later on. When I go to some more concepts, I'll discuss it. But I'll tell you, remind me. Okay. I just wanted you to notice it. So we'll come back to it later on. Role of an accountant. Now quickly I'll discuss. You can write these points down. Maintenance of books of accounts. Maintenance of books of accounts. So basically, accounting records may be maintained by the chartered accountants, the accountants in general. Statutory audit. I told you statutory audit means as per law, as per some act. So as per Companies Act, you have to conduct statutory audit. So this that is known as statutory audits, compulsory audits also you can say, compulsory as per a law. Taxation related activities. So that is taxation, direct taxes or indirect taxes related. So taxation. Management, accounting and consultancy services. You can give management consultancy or that MIS reports and all I told you yesterday. So in that also we can help the management in drafting that system and all. Financial advice. Okay, financial advice means where you should keep your money, where you should invest your money. You can give like this advices also. Like there are clients who come to you and say, where should I save money? Elli hana hakidre jaasti interest bartade. Where will my money become, double? Where will my money become quadruple? 21 days, you heard that dialogue, right? Akshay Kumar's dialogue from Hera Fairy or Hera Fairy, where he says, 21 days mein paisa double. So, like this, they come and ask, where should I invest money? Which is a good choice of investment? So that is 21 din mein double where it will be. So there's all this financial advices also people ask from chartered accountants. Other work could be, I told you that payroll, internal audit, all this also work the chartered accountants might be doing. Are we done? Yes. So that is the end of unit 1. Statutory means compulsory as per law. Okay, that is the end of unit 1. So we have finished one unit from your accounting syllabus from chapter 1. Next unit is unit 2, accounting principles, concepts and conventions. Put the heading unit 2, accounting principles, concepts and conventions. Anjali, I'll show at the end. If you want any slides to be put and all, just make a mark, write it somewhere. At the end of the class, tell me. I will show whatever slides you've not written or you missed some point and all that. You can let me know later on. Okay. So now what we're going to do is in this particular unit, I'm going to teach you different accounting concepts and conventions over here. Okay. And this is a very important unit again with the basics point of view, the ideology of accounting, the concepts we follow in accounting and all that will be studied over here, which is very important. In the future classes, in the future chapters, when we discuss a little more advanced stuff, I will keep talking about these concepts. These words will keep coming. We will keep relating to this later on also. So, no, take it down as notes only. Everything you should be taking down as notes. Now, accounting principles, concepts, and conventions. Here, I'm going to teach you principles is nothing but concepts and conventions. Okay, it is nothing but concepts and conventions when I say principles. So, we are going to learn 10 concepts and 4 conventions in this chapter. All theory part, no problems at all, just theory. So we will discuss 10 concepts and 4 conventions through this chapter. One by one, we will see what these are. It has implications on accounting. It has implications on various things we do in accounting. So when it comes, I will give you examples over there also. First, these are the concepts I'm going to discuss uh, as part of your syllabus, which is, I'll tell you what conventions and all, the meaning of convention and all, I will discuss, don't worry. Accounting concepts, we studied 10 of these. These are the 10. You have heard about all this already. So we discussed this. Now, before we start writing, we will just write accounting, accounting principles, meaning of accounting principles, meaning of accounting principles. Accounting principles refer to various concepts and conventions underlying underlying in accounts. Then put the heading important accounting concepts. Important accounting concepts. So you don't have to write this list to the buddy buddy. We will look at one by one and we will write one by one. First one, separate entity concept. First one is separate entity concept. Okay, concept ಅಂತ ಹೇಳಿದ್ರೆ ಅಂತ what is the meaning of concept? You don't have to know the technical definition and all, but just in simple words, concept means something that is a bit more man-made. A thing that was discovered or the process was set, that is known as concept. For example, now we will discuss different concepts. One, separate entity concept. This is a man-made concept. It was for some purpose we made this concept. For specific of accounting, we made this concept. Convention is not like that. Convention is something that happens traditionally. Convention means traditional. Conventional means traditional. For example, if you're talking about a conventional cricketer, conventional sports person, he's doing something conventional, traditional. I'll talk about that when we go to accounting conventions, but I'm just giving you a rough overview. So this is generally man-made. This is generally, the concepts are drafted by persons, humans, but conventions come as part of practice. People were doing it, we are continuing to do it. So conventions as part of practice, which have been inculcated or which have been adopted by accounts, that is convention. It is a traditional practice which you can see in other worlds also, not just accounting. Other practices also you can see those conventions. We have just adopted those principles or those conventions into accounting also. That is what we call by, that is what we mean by convention. However, concept was made specific to accounts. Specific to accounts, we sat and drafted these concepts. In real life, we will not see these things happening generally. The first one is separate entity concept. Can you tell me what is separate entity concept? Who can tell me what is separate entity concept? You studied this, right? Separate entity concept. When you were in first PUC, I'm sure your teacher told you about this concept. What is this concept? Two different parts, no, to different perspective. Every business has separate entity. The owner is different. Vedant, very good. The owner is different from the business. Owner Sakshi, very good. Owner is separate from business. Business is separate. Owner is separate. Very good, Kavan. Yes, that's what it means. These the owner and the business is treated as separate. Now let's take one example. There is this Mr. Let's name him Sam. So there is this Mr. Sam. He gets a business idea and he starts a cafe, a restaurant. Okay, cafe is a small restaurant. So he starts a cafe. Now, generally, when you start a business, I will tell you, when I wanted to start my practice, okay, I have a practice. I practice from home only for now, but I have a practice where I practice from home. Okay, so when I wanted to start my practice, I went to one of my mentors. I'm in one of my seniors who I treat as a mentor. So as soon as I qualified, I and my friend went to him, so to his office, and we asked him, sir, how do we practice, and can you give us some tips and all that? So he told, if you're practicing, remember, any, not just practice, any business for that matter, remember, first 2 3 years, first few years, I hope I'm audible. First few years, you only, he told me this, it kind of sounded a little off, okay, at that point of time. He was like, you should ensure that you don't have a sweeper, you don't have an office boy, you only should do everything. Of course, you can't afford to have a sweeper and office boy because you're newly practicing, you don't have so many clients. But still, he said, ensure that you're only sweeping and cleaning the floor also. I was like, why, sir? I qualified CA not to do that, right? So, but he's like, no, that is when you get sense of ownership about your business. Aga, what you will feel is you are the business and business is you. So you kind of make it your lifestyle. Every time you'll be thinking about your business. Every time you'll be thinking about your practice. You will see how to get clients from. You'll keep thinking about it. Where to get clients from. Hege clients in Tarodo. How to give good service to the clients. How to serve them better. How to make a name in that sector. How to build goodwill. How to build reputation in that business, in that sector. You will think about all this only when you think like you're the business. ನಿನ್ನ ಹೆಸರು ನಿನ್ ಮೇಲೆ ಆಗ್ತಾ ಇದೆಯಾ ಅನ್ಕೊಳ್ಬೇಕು, ನಿನ್ನ ಬಿಸ್ನೆಸ್ ಹೆಸರಲ್ಲ, ನಿಂದೇ ಹೆಸರದು. You might call it Adarsh Shenoy and Associates, you might call it something else, but that is you. That is how you have to feel. You should not have any differentiation between you and the business. So every person who starts a business will always think like this, that the business is him, he's the business. That's how we think. That's how it should be. If a business has to be successful, you have to think of it as it is your own. So you have to have that sense of ownership. You need to have that sense of relationship with that particular business. Otherwise, not possible. So this fellow started the cafe. He said, it is my business, I am the business, I am everything, I am going to ensure that this cafe becomes successful. So that is the attitude that people have outside. But in accounting, I mean, he thought he's the business, he's equal and all that. But in accounting, this is not the case. The accountant sitting in that cafe, whoever the accountant is sitting, who is maintaining books of accounts and all that, she is telling Mr. Sam, oh, Mr. Sam, you and business are not same. You may think whatever you want to think, but when I'm maintaining the books of accounts, I'm not going to treat you and the business same. You guys are not same. You same Allah. This is what this accountant is telling Sam. Now, she will ensure that when she is drawing up accounts, the business has a different entity, the owner has a different entity. Philosophically, he might think anything. Mentally, he might think anything. But when it comes to the accounting records, the business is separate from the owner. Can you tell me, where does it impact? We studied accounts for 2 years, right? Erad varsha accounts kaltideve now. So can you tell me accounting ಅಲ್ಲಿ ಈ ಕಾನ್ಸೆಪ್ಟ್ ಎಲ್ಲಿ ಯೂಸ್ ಮಾಡ್ತೇವೆ? Why this concept in accounting, and what is the use of this concept in accounting? Yes, it is used in every business. In accounting, ಪ್ರತಿಯೊಂದು business ಗೆ ನಾವು separate entity concept use ಮಾಡ್ತೇವೆ, not just company. Company is a separate legal entity. It's an artificial person as per law. That is something else. There's a term called a separate legal entity in the case of company, which is different. But separate entity concept is used in every business, every accounting record we use separate entity concept, not just an NPO, not just a company. Every business, every organization, we use this concept. This concept is followed. My question was not that. My question was, what is the impact of this following this concept? This concept is followed compulsorily in every form of business. My question is, where does it show? Either the impact elli toristade. Where is the impact? That is in the case of company, Yogesh. You are talking about separate legal entity from that time. I'm not talking about separate legal entity. I'm talking about just separate entity concept. Where does it show? Tanish, you are also talking about separate legal entity. That is different. Very good. Abhijit is close. Final accounts, yes. Very good. Very good. Who's this? Sakshi. uh, drawings, yes. When you draw up the balance sheet, where do you show the liabilities? Where do you show the liability? On this side, right? Liability is shown on the left hand side. Where is capital elli toristeve now? Capital account anta. Where do we show the capital account? Capital account is nothing but the owner's money. Under liability only you show capital. Right? Why? Think of this very practically. This fellow put some money. Let's say he put 5 lakh rupees into the business. Iunde hana, iunde pocket in the hana agta idane. He is putting that money from his pocket only to the business. And here, when they draw up the balance sheet, they are writing it under liability side. How can you be your own liability? Not possible, right? So that is why, because you follow separate entity concept, Cafe is saying, this accountant is saying that as per the books, you are an external person. Whatever money you have given to the business is a liability for the business. It is a liability for the business. The business is taking money from you as if you are some external person. Tomorrow, if it takes from bank also, we will show it as bank loan. It will also come on this side only. So you and the bank loan, everything is same. Creditors also will come here. Although you might think that you and the business are same, but your own money that you've given to the business is being treated as liability. Is being treated as a loan. Like take for example, now if you follow separate entity concept in your life, everything that you get from your parents is going to be a liability. You're going to say obligation. Our pocket money kottare 100 rupees for bus charges and for eating, obligation, liability. Because it is an obligation. So external party, if you're treating accounts, if you're having separate entity concept, of course we don't have separate entity concept in the case of in your life you don't have this, but I'm telling you, it sounds pretty much like that. Whenever it's your money, your parents will say, whatever I earn is for you. So that's how they say it. But if you get separate entity concept, if you tell your parents that you're separate, I'm separate, if you say like this, then every money that they give will become a loan, liability. You'll have to write it on the liability side. Similarly, in the business, we follow this concept in accounting. We maintain books of accounts and all, where the capital of the owner, the money that the owner invests, is shown as a liability. It is shown on the liability side because of separate entity concept. Separate entity concept in the because of this, we show it separately. Are you all following? So read this concept, what it says. Are you all following this or no? Yes. So just take this down, separate entity concept anta bariri. and write this. According to this concept, a business is treated as a separate entity and is distinct from its owner. In other words, the owner of the business is always considered as distinct and separate from the business he owns. Business he owns. That is why if he's drawing some money, if he's withdrawing some money, we will treat this as withdrawals. We will treat this as withdrawals, drawings. We'll minus it from capital. It's his money only what he's taking actually, but we are going to treat it as drawings. So like this, his personal expenses we will not let him record in the cafe's books. If he's buying a mobile phone for himself, not for the cafe, for himself, for his personal use, he's buying a mobile phone. We will say it is drawings. It is not for the business. It is not our expense. It is your expense, your personal expense. Entity means organization. So like this, we make a distinction between personal and business because of this particular concept, the separate entity concept. Take this down. You don't have to draw it. Drawing mat buddy. Are we done? Okay. The next concept is money measurement concept. We have already seen this. I told you we record only transactions in the books. We record only transactions. We don't record qualitative aspects. It is because of this concept itself. Whatever activities are measurable in terms of money, only that is to be recorded in the books, nothing else. According to this concept, only those transactions which are capable of being expressed in terms of money are recorded in the accounting records. We have discussed this already. Only those activities which are measurable in terms of money is to be recorded. Okay, someone that time was telling me about separate legal entity and separate entity. I'll just differentiate the separate legal entity and separate entity in quick words. If you understand, good. If you don't understand, it's okay. Who was that? Yogish or someone, right? Who was Tanish also was telling me something like that. Company is a separate legal entity. Okay, a company is treated as a separate legal entity. What do you mean by separate legal entity and separate entity? How is it different? Did you guys finish writing it? I hope you did. If not, you can complete it. Okay. Legal means law. Yeah. Okay. No, I'll just explain that once quickly. Company is a separate legal entity. Now, this terminology is not used in accounting. It is not used in accounting. It is used in law. For yes, very good. Separate legal entity means entity separated from owner by law. In the eyes of law, they treat the or company or the organization as different from the owner in the eyes of the law. This is only in accounts. This accounting principle. This is an accounting principle. This has nothing to do with law. For example, here sole proprietor, we follow separate entity concept, right? We show capital separately and all that. We separate the owner from the business. But in the eyes of the law, they don't do this. In the eyes of the law, the business, sole proprietor and the business is the same. For the eyes of the law, it's the same. There is no difference between the sole proprietor and the business as per law. So they will yes, they will not tax the business separately. So if you remember, income tax pay madidanu now, expense agi torsudilla. The business might pay some income tax, but we don't show it as expense in the final accounts of the uh, business of the organization. We show it as a minus from his capital because it is his personal tax. The law doesn't tax the business. Remember, income tax is not charged on the business because as per the law, company is not, or the, sorry, not company, the organization, the business of a sole proprietor is not different from him. In accounting, we make the separation, but not in law, as per law. So tomorrow, if the business does some fraud, business intadru fraud madittu, he will be held liable. Business is not a separate person. It's not a separate legal person as per the law's eyes. So he'll be held liable. He might go to jail. He might have to pay a penalty. He might have to pay, personal punishments might be there for him. Even in the partnership, same principle applies. In the eyes of the law, the partners and the business are not separate. It is the same. Business doesn't have separate identity as per the law. Adik PAN card sigudulla. Adik separate, recognition sigudulla. Identity sigudulla as per law. However, in the case of a company, you have studied this features of a company. You studied a point in features of a company. Company is an artificial person. It is an artificial person. Have you studied this or not? You studied this, right? They call it as artificial person. So this, as per law also, the owners and the business is not the same. As per law also. In accounting anyway, we don't treat it as same, but as per law also, this has a separate legal entity. This has a separate legal entity. So you see, the companies are taxed separately. Owners are also taxed separately. Even company tax katbeku, owner kuda tax katbeku. Illi hage alla. The business doesn't have to pay any taxes, but the owner has to pay taxes. Something the business does, the owner will be held responsible for this. But here it's not like that. Something that the company does, the owner is not held responsible for it. The owner is not supposed to, incur some punishment or something for what the business company does. For example, you put some money in any of these companies, you invest, you become an owner of that company, you become a shareholder, you become owner of that company. Tomorrow the company does fraud. Satyam, there were lakhs of shareholders. You can't put all the shareholders into the jail because here ownership and management is different most of the times. Ownership is different from management. But that is not the case in the case of sole proprietorship, or it is not the case in the case of in the case of partnership businesses. This is not the fact. But in the case of companies, most often than not, we will see that the ownership is different from the management. So the board of directors, the management is appointed by the owners. There will be something called as board of directors, right? Which is appointed by the owners. Owners appoint them. So if something goes wrong with the management of the business, you can't hold the owners liable for it because they don't get involved in executing the decisions and all that. They might have a say in some important decisions, but at the end of the day, the board of directors are the ones who take decisions, who execute the decisions and all that. So the owners are not held responsible because of separate legal entity concept. The management is the board of directors or the management of the business is the agent of the company. We call them as agent of the company. So whatever the company does is through management. The management takes decisions on, because it is an artificial person. It doesn't have a brain. It doesn't have a thinking capability. So the board of directors do the thinking, and the decisions on behalf of the company is taken by the board of directors. So the board of directors are agents of the company. They are appointed by the shareholders, but the management, the board of directors or the management is the uh, agent of the business, and that is how the decisions are taken. So the separate legal entity concept is followed. Separate by the law, by the codes of law, by the acts, by the statutes. This particular concept is followed. But separate entity concept we follow not just for companies, we follow separate entity concept for each and every organization, each and every business. No, the different process, Pranav. You will understand that later on. Okay, I hope you have understood the difference between separate legal entity, Yogesh and Tanish or something. Someone, I hope you understood the difference between separate legal entity and separate entity concept. These are two different things. Okay, don't get confused. Okay, so that was about money measurement concept and separate entity concept. We finished two concepts. Next one is going concern concept. What do you mean by going concern concept? Vedanta is correct for a long period of time. Yes. What is going concern concept? Can someone put it in better words and tell me? More than 1 year. Perpetual succession. Uh, no. Perpetual succession is something again company feature advertising. Expansion of business. Business lasts for long. Last one not completed writing. Okay. Okay. I was talking about going concern concept. That is perpetual succession. What you guys are saying, Tanesh and Purvi. Main concern should be growth. Okay. Getting very philosophical. Business carried on by organization. Transactions are continuous. It's not one time or two times. Okay. Okay. I will tell you what it is. You've not studied this properly in first PUC. Going concern concept says that the organization, it's not like that. What investment strategies you're telling me? You guys are telling me. Okay, going concern concept says, listen to me, that the business will continue for a long period of time. Going concern concept says that the business will go on for a long period of time. Look at this. Under this concept, it is assumed that the enterprise has neither the intention nor the necessity to wind up the business in the foreseeable future. Foreseeable future means long period of time. It is also known as assumption of continuity. It is also known as assumption of continuity. So what we say is that once you start, once the business is there, we assume that the business goes on and on and on and on for a long period of time, and there's no intention of closing the business in short run. There's no intention of business of liquidating or ending the business or closing down the business in short run. That is what the assumption is made in accounting. We make that assumption. Now my question is, don't you think every business is like this only? Every business, thinks when you start a business, when you start a entity of your own. Now let's say when I started my practice, or when someone starts a shop, when someone starts a business of their own. My question is simple. Who starts a business and says that I will close this business in 2 months? I don't want business. I want it to end. No one. Every time we start a business, you always say, this business is to go on and on for years. It should become next Reliance. It should become next Tata's. It must be the biggest, in company in the world. It must run for 100 years. My grandchildren, my great grandchildren, my all these guys have to get benefit of this company. It should be like Tata Sons. It must be like Reliance, Dhirubhai Ambani and Mukesh Ambani. It should be like that. It should go on and on and on and on. Everyone wants to do this. No one is starting a business with a perspective of saying I want to close the business tomorrow. I want to close the business in 1 year. No one does this. What is it doing? My question is very simple. What is it doing in accounting? Accounting का याके now ये concept and follow मारते हुए, and why is it there in accounting? Think about it. I will continue this tomorrow. You write it down. You write this going concern concept. We will discuss this again tomorrow. I'll stop the session here. Think about this. My question is, why do we follow going concern concept in accounting? Why is it important to follow going concern concept in accounting? And how does it impact the accounting records? How does what happens if I don't follow going concern? How will it have an impact on my accounting? How will it have an impact on my financial statements? That's my question. I'll end the session with that question. Tomorrow we will continue. Thank you. Write this down, okay? Take this down. Thank you. Have a good day. Have a nice day, guys. Liability is an obligation, Nabil. Obligation. More like un sala, un responsibility unto वापस ಕೊಡೋದು. That I'll tell tomorrow. Tomorrow's class. Rahman. Depreciation is reduction in value of asset. Every asset, every asset's value reduces over time. That is known as depreciation. Thank you. Ethan, no googling. I think the initial sessions will be uploaded on YouTube. You can check it out on YouTube. It'll take some time. They'll upload it tomorrow or something, or today evening or something. But you can check it on YouTube. Bye, bye, guys. No, it should be one. You can change your signature now only to some extent. I'm not sure. But see, don't change. Okay. Someone told me to show some topic is that time. I don't know what was it. I forgot. Role of an accountant, is it? What notes? Okay, this one. So when there is a fraud by a sole proprietor, the owner is held liable. But if the liability is more than the company, the shareholder held liable is what you are asking, right? What notes you want? Arshin, I did not get your question. Vedant, the answer for your question, no. That's why you have a feature of a company which is limited liability. So the liability of the owners is only limited to the share capital, what they contribute. That's all. You can't ask for more. You're writing down the notes, right, Arshini? What more notes do you want? Write down the notes. Whatever I told you in the initial class, take it down in your notebooks. The textbooks, I think you're talking about textbooks. Textbooks will be available online on the Trisha Plus app. I think you will be given a password and a username. so you can access it later on. I'm not sure when they're going to give it. So once you get it, you can refer that. And second one, ICI material is available online. I told you how to get it. ICI Viewers Knowledge Portal, right? I told you how to get it. So that textbook is also over there. Accounting concepts are concepts which we follow in accounting. Like for example, in arithmetics, you have something called as addition concept, multiplication concept, subtraction concept. So similarly over here also you have concepts like this. Yes, you can leave. Uh, Nabil, there are concepts like these which are followed in accounting at different places. That's why we call as accounting concepts. That's all. So I'll end the session. See you tomorrow, guys.